first, Johan, tell us. I'm more interested in the person. I want to learn more about you. Tell us about you. Before consensus, who were you? What were you? And then jump into your presentation, please.
Perfect. Well, you're slightly stealing my thunder because it was my first slide. But yeah, so hi everyone. It's a pleasure to sort of share the following 20 or 30 minutes with you. My name is Johan Bornman. As I indicated, I lead Metamask Institutional. My background is an investment manager. How to start an investment business for 6 years. Realized that in the world in 2014, and then to join a road advisor where I helped to essentially build their investment engine, scale the company from 16 to pockets. Founded a fintech business after that, and then I've recently joined Consensus. That is a summary of 14 years in the UK. I've given an overview of who I am to connect with everyone after this presentation. Do reach out to me either on LinkedIn or on this chat, and I'll drop my details. So I thought I would just, talk about 3 very simple things this evening or this afternoon. Firstly, the importance of DeFi for institutional investors. The needs of institutions are very important about building a product in the space. And then lastly, no doubt why most of you have stuck around is just to give you an overview of what Metamask Institutional is. So with the first topic in mind, I know there have been some incredible speakers the last few days, both founders, innovators within the space. Hard to add to knowledge has sort of been propagated over the last few, but I thought I'd give it a try. What I wanted to do is just delve first into this ecosystem and why it's so important for investors. I thought I'd start with one of my first slides, which is a chart by Alethio that runs into kind of the network effects within the ecosystem. And this is looking at users in the network in 2019. And I notices if we move forward 1 year, we've obviously seen exponential growth throughout the system. And this is much part of the there are different analogies one can use, the railway system and the another. But again, no surprises given I'm speaking with this evening. There's obviously track of growth within DeFi. One can look at unique addresses of obviously a very famous chart that has no doubt been used over the last few days, along with total value locked. And I had a look at this a couple of days ago and it was at 40 billion. Delving into the protocols themselves, we've seen just unbelievable growth over the last, with this up by 1,000%, and within lending protocol. And I think the really need to note on these slides, the total value lock, but also very important, the revenue of these protocols. And having been a fintech founder in the startup ecosystem in fintechs here in London, and the idea of these companies getting to revenue so quickly is just truly astounding. And I think with that in mind, it's not surprising that we've seen this hyper growth, and with that, obviously, these hyper returns, and that's naturally going to attract institutional capital and more of it. But underlying this chase for yield and this chase for returns, there's obviously a really important fundamental story happening as well. And this idea that regardless of where every single financial instrument or function with institutional finance, whether it's central banking, asset management, payments, or insurance, money itself, these things are being rethought and rebuilt from first principles. And it's not happening in a space of years or decades. It's happening in a time frame of months and weeks. And that is incredibly, incredibly exciting. There's a quote that I love, goes, the innovation is the child of and the spirit. An entire new system. Look over to the adoption cycle, which is obviously very, very key. There's different ways to categorize this. I just wanted to summarize it for this talk. we've seen roughly sort of 4 user personas that have developed within the ecosystem. Firstly, you have adoption within your DeFi super users. These individuals are normally technically very strong. They're auditing the code. They're reading the smart contracts of these protocols. And obviously, they are very active in participation within the ecosystem. That then normally moves over to the DeFi degens, and their primary focus is to chase yield and anonymity. And then off the back of that, you're seeing institutional investors move into this space. And again, I can probably give an hour's talk in terms of adoption cycles within finance, how this compares to the bucket trading shops of the 1920s or the 1870s in terms of new financial instruments. But just if you look at the Coinbase S1 that was released a couple of weeks ago, I think it gives you a lot of insight into just how institutional capital will flow into DeFi, over the next few years. And if you look at 2019 versus 2020, you've obviously seen a 1.5x growth in retail trading volume, and that's the blue bar. But I think very interestingly, you've seen institutional volume 2.5x over that period. And no doubt, this is only going to increase in the years ahead. Now, on top of that, obviously 2020, besides being the start of the bull market or perhaps a hyper bull market within DeFi, you've also seen large institutional capital coming into crypto space. And very famously, Paul Tudor Jones wrote his newsletter back in April talking about Bitcoin. We've seen also Stanley Druckenmiller about the importance of Bitcoin. And I think it's a really interesting question to be asking ourselves, when are these famous investment managers, these legends of traditional finance, going to be mentioning, Uniswap, or are they? And I think the answer to that might be quite soon. This is a very famous chart that was put forth by Raoul Pal, who is quite well known in the heavy big bull. They are Ethereum versus Bitcoin. And he's viewed that Ethereum is following the same, adoption growth as Bitcoin, excuse me, but just 4 years apart. And I think really that if you look at the speed of adoption, the innovation within the DeFi ecosystem, I suspect that a lot of these investment managers and institutional capital will be flooding into the DeFi ecosystem much faster than this. So we know it's an interesting space. We know, there's a lot of growth. We know there's a lot of opportunity, but there's really kind of core needs that institutional investors have when allocating capital. And this is kind of the key focus of what I'm going to talk about this evening. And there's some really kind of traditional tier 1 fundamental needs when capital allocators are looking at any sort of where. And this can apply to, an order management system. It can apply to reporting or risk management. In all those cases, fund managers need safety, they need security, they need reliability and efficiency. And then off the back of that, depending on their allocation process, whether they tend to participate at seed stage or maybe sort of, later stage, things like growth capital or trading within the ecosystem, normally they need one or multiple of these points that I've highlighted here. So they might need multiple seats because they have multiple investment managers or analysts. They might need to have different parts of the book managed according to different risk profiles. They need trade rules compliance and pre-trade compliance. And of course, custody solutions, which is something that's absolutely needed if you have LPs in your fund. Now, the problem is today in DeFi, this is really, really, really difficult. And we've spoken to countless investment firms of all sizes, large players that have billions to deploy, to smaller funds in Asia and Europe. And what we found is that the way they allocate capital today can very much be sort of graphed on a bell-shaped curve. And what you have on one end is essentially, almost no trust in a extension wallet like Metamask, where more sophisticated investment firms actually reverse engineer the protocols themselves and then therefore call the smart contracts directly. We've also heard the almost exact opposite, where funds have complete trust in Metamask and therefore allow the capital allocator or the investment manager or the trader full access to the funds in order to call smart contracts. And obviously, you're very much relying on that individual to send the funds to the right address. And within this bell-shaped curve of possibilities of the way institutional investors allocate capital today, there's an average that we've heard. And this average is a very, very, very painful process. It normally involves multiple steps. You're taking potentially assets from a cold wallet. You're moving that to a hot wallet, something like a Gnosis safe. You're connecting that Gnosis safe to a Metamask wallet. You're connecting that to a DApp. Often the DApp doesn't support your Gnosis safe. You've got to scan QR codes. You then have to approve. You have all your partners sign in and approve and sign this transaction. And essentially what you have is, as we indicated, some requires multiple steps, multiple approvals, and often requires gas costs. And one of the fund managers that are in it, that it really sucks when it comes to trading. We've also spoken to a lot of funds that are raising new capital and new funds, and they're running into very important questions from their LPs and their investors. And they're saying to us that, we need better answers when we're having these sorts of conversations. We have a very put together and cobbled together process today, but we'd like to replicate what we're very familiar with from the digital finance world, where we have really good risk monitoring, we have really good portfolio reporting, and we have a streamlined capital allocation process, and we can transact as we need to. And so with that in mind, I think that kind of neatly segues into Metamask Institutional, and no doubt why most of you have stayed on this presentation to hear more what it's about. And I think, this was very much sort of our first principle hypothesis from day one, that this way of invest is really, really painful into the DeFi ecosystem. And how can we streamline this and make it safe and secure and allow investors to do what they do best, essentially? And the way we've solved that is essentially what we think marry the best of both worlds. So on one side, very importantly, Metamask Institutional gives investment managers, traders, and principals access to MetaMask, which obviously gives them access to the entire DeFi ecosystem. And that's really important because most dApps are building their UI to fit into Meta. So obviously, by gaining exposure, have access to the entire DeFi space. We've also partnered with Curve, the custodian, as our first launch partner. And this is really important because this, again, allows firms to put in place the operational processes and infrastructure that they need. So not only storing their private keys as a custody solution, but very importantly, having multi-sig security, putting trade rules in place, for example, whitelisting particular smart contracts, having trade rules around the number of transactions within a wallet, the size of the transactions within a wallet, and therefore, the entire pre-trade compliance handled by integrating with a partner like Curve. And therefore, what this allows institutional investors is to have the same trusted experience as they know before. So having a wallet, within your browser that you can access dApps with, but also very importantly, being able to connect your custodial account. And that obviously tremendously improves the capital allocation process. It means that, similar to a hardware wallet process, which I'm sure that most of the audience is very familiar with, you go to dApp, you connect your MetaMask wallet, you initiate the transaction, you confirm the transaction, and then you go to your custody desktop application and approve that action before it gets broadcasted to mainnet. And as I've highlighted, I think the key thing, we wanted to really solve is this idea of how can we give institutions not just security and robust compliance, but also just a really reliable trading and operations management process. So that's really sort of the main points I wanted to highlight today. I wanted to cover just how important DeFi is. I think there's something obviously we all know, it's very much preaching to the choir. But the reason why I wanted to highlight it is that focusing on the fact that more and more institutional capital will most likely go into this ecosystem. And today, it's a really difficult process of managing money effectively. And that's really what we wanted to solve with Metamask Institutional. How can we allow firms to trade, invest, risk manage, as well as store their keys at a custodial solution? So with that in mind, I have an ask for the audience. We have an insanely exciting roadmap ahead. We've looked at everything from investment research to pre-trade compliance, capital allocation. We looked at smart contract auditing, risk management, reporting, and we're solving needs of funds in all these various categories. And we're having conversations with funds in the ecosystem constantly. And if you're in the audience today, I'd love to hear from you. You know, it really helps us to prioritize what set of features in this very exciting roadmap we should be pushing ahead in order to solve your needs and your requirements. So I know there are a few capital allocators listening on this call. So yeah, do get in touch with me either directly via chat, reach me out on LinkedIn, or my email is at the end of the slide. And so with that in mind, I will go back and continue the conversation. Look forward to questions.
Hey, Johan, thank you for that presentation. So just want to go back to your summoning slide there that you had, like the hopes when you want to do a simple transaction and there's multiple levels of signing and all that kind of stuff. When do you think that's going to change? When are we going to get to a point where we can, or in this case, institutions can do a lot of that a lot more quickly, with less friction? Never mind gas prices and all that. When do you think that's going to become a reality?
Yeah, so Jamil, I'd like to say with the launch of Metamask Institutional, which is live today, it's a very good question that you have. I think as more funds enter the DeFi space, and there's a bigger focus in order to streamline that process, that by its very nature, that requirement of important individuals is going to naturally drive building within the space to make that process a lot more seamless. I think obviously today we have that here, but as you pointed out, so if you're a firm that potentially has a very aggressive trading methodology, you're running a quant fund, or you need to move very quickly, it's just not possible. And so as one fund manager said to me, they call it the summoning ceremony. They're trying to get everyone into the room at the same time to approve, to sign, and initiate the transaction. And so this is something very much that the pain point we're trying to solve with our launch.
Okay, great. We have a question from the audience. Which other tools do institutions use in practice when trading DeFi assets apart from MetaMask? Who are the competitors to a Metamask Institutional?
Yeah, great question. So basically, and I'll turn my video off because I see I'm getting some flag here again. That's a great question. So it really depends on where in the transaction flow that you're talking about. You're looking at kind of everything from the analysis piece to pre-trade compliance to the initiation of transaction. If you're focusing specifically on the trading piece, which I think your question is aimed at, again, you tend to have two extremes within the bell-shaped curve. One is larger firms, probably some of the most famous institutional investors, are actually reverse engineering the smart contracts themselves, and therefore calling the smart contracts directly. And obviously that's a really inefficient process, right? It requires them to do that on a protocol per protocol level. On the other end, they're potentially using other wallets when they're interacting with some of the dApps. But most of these investors are using MetaMask today.
Got it. Very good. And in terms of the software itself, is that publicly available or is it limited access? The institutional, is it a separate tool?
Yeah.
What is it? Okay.
Yeah. Awesome. So it is available today. It is available through the custodian curve. If a fund or capital allocator signs up with Curve, the custodian, they're able to access MetaMask Institutional.
Okay. Okay, we're out of time. Our next speaker is up. Johan, thank you so much for your presentation. Really appreciate it. If you want to drop your contact information in the chat box, that'd be great. Thank you so much.
Thank you. Apologies for the unstable interconnection. Unfortunately, what can I say? Bad internet connection in London.
DeFi and unstable are they go together, so don't worry about it. You're good. Thank you.